Hello, I'm James Yardley, a Senior Research Analyst at FundCalibre, and today I'm joined by Dr. Ian Mortimer and Matthew Page, Elite Rated Managers of the Guinness Global Innovators Fund. Thank you very much for joining us, guys. So you've got a very interesting and unique fund. How do you define innovation?
Well, innovation for us really means companies that are doing something newer, better, smarter than their peers, which is ultimately going to translate into companies that have got faster profit growth, companies that are able to generate higher levels of profit through wider profit margins. And it also often means that it's companies that are growing in such a way that they're less exposed to the broad economic cycle. So many of the themes that we look for are themes that are going to drive economic growth over the longer term, but they're somewhat independent of recessionary or growth factors that may be happening in the broader economy. And what that means is that potentially the growth of these underlying companies can be somewhat smoother and can continue to grow in difficult periods as well.
And how do you pick themes which are going to be long-term winners and not just short-term fads?
Yeah, it's a great question. And ultimately, when we're thinking about building our portfolio from the starting point of, as Matt just mentioned, sort of secular growth themes, we're not trying to pick the next big winner, if you like, before it's been established. Ultimately, we're looking for themes that and trends that are already somewhat established, and you can see that they have been working, if you like. But what we're trying to identify is then companies that are trends that are established, that we think have strong and large pathways to continue to grow. So by that, we're thinking about looking for large addressable markets. As Matt mentioned, we're looking for secular trends as opposed to trends that are purely based on economic growth or maybe a more cyclical in nature. And ultimately, we're not necessarily purely looking for highly disruptive areas. That is an interesting place to look, but we're also looking for things like payment processing or online payments. The growth of e-commerce, for example. This is well established, but we know the addressable market is already very large, and that the current incumbents can continue to grow into that by not just themselves doing better, but also having a strong ability to take market share that already exists. So by putting all of that into context, we aim to put ourselves in the right areas, as opposed to short-term fads, as you mentioned, that could maybe come and go dependent on small changes in maybe what's happening in the economy, or they reach saturation very quickly. I think these are two areas that we're ultimately trying to avoid.
And can you tell us about some of the current themes in the portfolio and which are the companies which are benefiting?
Yeah, so there are 9 core themes that we are looking at the moment. The first one would be advanced healthcare. So that includes companies in the biotech space or in the pharmaceutical space, but it also includes some companies in the medical devices area. So a company like Medtronic would be a good example. Secondly, we've got artificial intelligence and big data. And what you really need in order for that to be a growth area is you need a certain type of chip called a GPU, which is able to process and really drive all the algorithms that are behind all the artificial intelligence. And so a company like NVIDIA is a great way of getting exposure to that. Thirdly would be clean energy and sustainability. So a lot of investment clearly is going into this space now as we're trying to reduce carbon emissions. Part of that move is towards more efficiency in the electrical grid infrastructure and also electric car charging. So a company like Schneider Electric is a good way to get exposure there. Fourthly would be cloud computing. That's becoming a more and more prevalent part of how we engage with software. And Microsoft is one of the leading companies there with its Azure platform. Another theme is internet, media, and entertainment. We've all been using streaming devices for quite some time now, and the growth there is still extremely strong, whether that's through a company like Netflix or whether it's gaming. And it really is global in nature, with the likes of Tencent being a leading Chinese company in that field. Then we've got mobile technology and Internet of Things. So we're all using smartphones more and more to do more and more things. A company like Alphabet really sort of covers that whole area, I would say. Then we've got the next gen consumer. Clearly, we're all buying more and more online, and Amazon is really the leading business there. But there are many other businesses that are benefiting from that shift. Another theme is payments and fintech. So the move away from cash to a cashless society, whether that's through contactless payments or using companies like PayPal to make payments for online purchases. And then finally, for us, it's robotics and automation. So it's been a growing area over the last 20 or 30 years. Robotics and automation have been used in the automotive industry for a very long time, but we're now starting to see it more in picking and packing and supply chains. And as countries and companies look to build more resilience in their supply chains, I think increasing use of robotics and automation will be a theme for some time.
And how do you select the best companies from within each theme? Do you prefer to choose a range of companies, or do you just prefer to identify one or two winners?
Yeah, ultimately, in terms of how we're actually constructing our end portfolio, is that we're getting to the ideas of the types of companies we want to be investing in through the thematic approach that we've just been talking about. However, what we're very keen to note is that we are very aware that just because a company is innovative does not necessarily make it a good investment. So what we're trying to do in terms of selecting stocks for the portfolio is not necessarily try and fill up certain buckets. So we have one company in each theme or whatever. It's really trying to find the best companies from that wider group. And to do that, the first thing we want to look for is profitable businesses. So we want companies that have actually converted their revenues and their sales into earnings and profits. So we're not necessarily having to look at companies where they're just trying to grow as quickly as possible and they're not really too worried about whether that growth is profitable or not. The second thing is we look to invest in strong businesses. So we look at that in two ways. One is through companies that have good balance sheets. So companies that don't have a lot of external debt that can be problematic if the company gets into trouble. And we also like companies where they're generating a return on their investment that's higher essentially than the cost of that investment. So these companies are kind of creating value for the investments they are making. We also quite like asset-light business models. So that's sort of saying, a software business doesn't require lots of extra property or equipment to be able to grow the next sort of dollar of earnings, compared to, say, a car manufacturer that if you want to double your revenues, you'd have to double the amount of manufacturing space you might require. And that's important because these types of companies, which are asset light, can grow maybe more easily. They don't need a lot of external capital or again, extra equipment, for example. And then finally, we don't want to pay up too much for these businesses. So what we find is that one of the themes that, the problems with looking at themes that can occur is that people get extremely excited about that theme and they maybe lose sight of whether that theme is actually investable anymore. There's plenty of examples, whether it's biotech stocks getting extremely overvalued, whether it's 3D printing that everyone got extraordinarily excited about, but ultimately fizzled out because the addressable market was much, much smaller than the companies were getting priced to be able to kind of take. So one of the big things we're looking for is, are these companies reasonable value, and are we paying up too much for that expected growth or not? And if we can avoid that, then hopefully we will end up with good, solid businesses exposed to growth areas whereby we're buying them at reasonable prices. And we think that combination is a very powerful one if you're investing over the longer term.
Ian and Matthew, thank you very much for joining us today. You can find more information on the Guinness Global Innovators Fund at FundCalibre.com.